Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, June 28th. I am your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That's our home on the web, MarketTalkAg.com. You can find all of our great resources there, our social media, all of our radio affiliates, and much more. It's all online. One-stop shop, MarketTalkAg.com. Well, a very busy day and a very much an up day in the markets today. Here as we start off the week, let's talk about it. Bring in our good friend Bryan Doherty with Total Farm Marketing joining us here today. And Bryan, happy Monday to you, sir. And man, oh man, a nice way to start the week with a lot of green across the grain and oil seeds and the livestock trade here today.
Yeah, it was a good way to start the week considering how poor the week finished on Friday. This was really welcome to see this kind of a bounce and a push higher. Kind of green all over the map. So I say kind of. There's a few things out there that maybe stock market was off a little bit. But even soy meal participated, and that's been a real kind of dog lately. That was up $4 to $5. Soybean oil up strong. Beans up over 40 cents. Corn. July is still the front month, but first notice day was on Friday. So that, that's last trading day for options. First notice day will be on Wednesday, the 30th. So July futures lead the way higher with cash bids are likely switching over or will switch over to September, closing 28 higher at 558 and a quarter. Corn found some support from just this continued concern of dry weather in the Northwest. The crop's not, in dire shape, but it just keeps trying to hang on. Excellent rains in parts of the Midwest. So you really are developing sort of haves and have-nots, but also there was support today from cold temperatures forecasted for the Brazilian crop and some potential freeze damage. And remember, that crop's a little late because it's been late all year. Beans got in late because it was dry. Beans got off late. Second crop went in late. So now it's running into maturity. They're starting some harvest, but there's a lot of crop in the maturity stage that a freeze could do some damage, at least. So that's what the reports say today, Jesse. So a lot of stuff, a lot of short covering, buy stops hit, those type of things. Now the key is follow through. Here's an ironic note, though. If you look at this December corn contract, I just want to put this in perspective. On March 31st, we hit a low. I'm just going to say it's 450. It was really like 449 and 3/4 or something like that. But let's just say 450. Our high was 638. If you go right to the midway, the midpoint of that, that's just about where the corn market is today. So right around this 540, 544, 545. Today we hit 547. So we're still lower than where we were the last several days prior to the end of last week, and where we recently peaked out. But we're right in the middle of that bigger range.
And that's a great point you make. And, you mentioned the haves and the have-nots when it comes to weather. And I was traveling a lot this weekend. We didn't have a show on Friday. I was in some rough territory with no cell service, no internet service. But I got to see a lot of the Midwest here and experience some of that rain that came through portions of Iowa, Wisconsin, driving back yesterday through Illinois and seeing some fields that were flooded, some low spots that were pretty wet. A lot of rain fell, and I know a lot of folks are talking maybe some flooding. Northern Missouri, central Illinois, southern Illinois were some areas where they saw a lot of rain. And then there were some areas of Iowa that saw some locally heavy amounts, but a lot of portions of Iowa missed out on that rain. You go north and west of there, didn't really see a lot of rain. So it is kind of that story of haves and have-nots, and I think it's going to be very interesting here moving forward because those areas, really needed the moisture. I mean, you're talking a good 15-20% of our corn production right there, Bryan.
You are. So what's interesting too is you've got these really copious rains in the areas that you went through. So you've got some absolutely wonderful crop out there. Some producers we talked to today said, yeah, it's amazing how good this looks, especially if you weren't in one of these real heavy areas. There's one of our customers, he's in I'm going to call it north central Missouri, sort of that area, and up to 15 inches of rain. So way too much in his area. But that's that stationary front that's been kind of out there for a while, where it vacillates north and south. And if you're you got hot on one, cold on the other, and it just keeps punching away at some heavier rainfall, but it's not getting into the northwest, and those are the have-nots right now. So really interesting scenario set up as we move into these big reports on Wednesday.
Very, very true. And talking about those big reports on Wednesday, that's going to be the other kind of market shaper here for the next few weeks ahead through the rest of the summer, arguably, that along with the weather. And, we look at these reports, and a lot of the pre report estimates staying on the corn track. They're talking about more corn acres, Brian. And I think it's going to be curious to see what number USDA comes with, and just how much of that ends up really being a reality when it's all said and done for this growing season, just due to the weather concerns that are out there.
Yeah, so you got weather concerns, but right front and center is the uh, acreage and stocks report. So the acreage number, this is from Bloomberg. So what their number says here is 93.8 million, Jesse, and in March 31st was 91.1. What I find kind of interesting here in these numbers, though, is the lowest estimate is 92 million, and then you got up to 95.8. So you got a big range, but even the lowest estimate thinks there'll be some increase in acres. So you got to think with higher prices that basic economics kicks in, and that farmers will plant more corn. You just got to think it's a question of where. The I states really don't switch in and out much. It's more the fringe states. We'll see what that looks like. My guess is it was dry in Wisconsin, it was dry in Michigan, dry in the Dakotas, Minnesota, that you'll see more acres in that area because farmers got in early. It was going well. They just kept moving. And then, of course, we'll have the bean report out. But so we get that out. Then the stocks report, well, that's kind of a wild card. We'll see what that says. The recent stocks reports have been friendly, indicating a trend of declining supply. That's either better demand, overrated supply at some point, maybe a combination of both. You and I talked a lot about the 19 crop with low test weight. That doesn't show up for a long time. Often when you take grain out of storage, it goes in by volume, out by weight, that kind of stuff. So we'll see. But Wednesday's going to give us a lot of information. Then the market focus will turn right back to weather.
Definitely. And on the soybean side, a very strong bean market today. We've alluded to that. Bean meal was really strong. Bean oil was strong as well. There's some more talk on the demand side of more China soy purchases out of the Pacific Northwest. Those rumors are out there. But Brian, overall with this soybean crop, nice to see the big moves today. We do have a little more time, though, when it comes to weather with this soybean crop versus corn. And but then again, we don't have that much more time. So I think that's going to start to be a factor here as we get into the month of July.
Right. And even the thing going back to corn or soybeans here, that in June you get some rain, that's great. If you're one of these areas that got a lot of rain, maybe some of it's, obviously too much and runoff and things like that, but it's hard to really argue that it's not beneficial. But then again, it's been spotty in nature. So in June, if you get spotty rains and you've been dry prior to that, you're going to need more in July, more in August, obviously. So if the temperatures were to crank back up and get more like summer-like, and then we start drying out again, we're a long way off from the weather market being behind this year's crop. Soybeans, they just don't take much to kind of stick around in June. More critical weather into July, and then obviously August. Corn, a customer gave me this analogy today, made a lot of sense. Corn crops like your kids, when they're little, they just don't need much. When they hit those teenage years and really start to grow, they need a lot. And that's where corn is kind of moving into. So some awesome timely rains right now. Others, though, really need it.
And I will add to one more point on my travels this week. Those crops, Illinois, that I saw, especially, I think around that Champaign, Bloomington area, really looking good. And then there were some areas, through Iowa into Wisconsin, Minnesota, where it looked good, but there was maybe a little bit of stock quality issues. So it would be interesting to see what happens there. It just seemed like those plants saw a little tip back there already. But nonetheless, going to be interesting moving forward. As far as marketing after a day like today, and we've been talking about this and looking at this USDA report ahead on Wednesday. Any fresh advice you have for folks who've been looking at that marketing plan and revising things the last week or two?
Yeah, we're at a time of the year that unless it's really just, a full-blown dry pattern everywhere, rallies generally, we want to really view those as opportunities to take advantage of ourselves. So as the calendar marches along and we're toward the end of June, let's have that mindset. My theory is when there's moisture in the atmosphere and a lot of it, it's just a matter of time before it gets everywhere. Now, that's easy said. When you're listening and you're in one of these dry areas, you're like, yeah, right. But it's a vast improvement of the trend that we saw. We had 12, 13, 14 days in my neck of the woods above 80 degrees. It was a record. So when you're already dry and you get that, boy, the crops are really, they're hanging in there, but not really looking healthy. Got some rain now. Certainly look much better, maybe even great. I don't know if I'd throw them in the, excellent category, but um, but vulnerable to dry out again. So stay balanced is my point. Sell the rallies, retain the ownership with some kind of call strategy, buy puts if you don't want to forward sell. We're at this kind of strange point right here where I talked about the 50%. That's another dollar drop or more to get back down to where we're in March. And usually if you're on your way down, you know how fast things fall apart and the gains momentum. So we really want to guard against what people really don't think is going to happen. And that's a real tough fall for price. Price just keeps going down and down and down as the funds go from that long to that short, a scenario like that.
Bryan, let's talk livestock. The hog market looking like maybe finding some stability and support around that $100 mark. A very strong day here today, which was needed after last week. Just seeing a lot of deterioration in this hog market, but some limit higher moves today. What are you seeing on the charts when it comes to this hog market to start the week?
Well, I think you just hit the nail on the head. What we're seeing is a lot of volatility. You saw a market that, as we argued, maybe got over its skis up into that 115, 120, but it had that momentum. We always talk about momentum and short covering, and you get hogs price higher than cattle. And then if we go back, the talk was, China's demand starting to slow. Why is their demand? Well, their hog herd's bigger. Remember, kind of keep in mind too, I don't know how widespread this is in China, but they've got these kind of super hogs, these really big hogs. So they chew up a lot of grain, but they make a lot of meat on the hoof. And so that might be a little bit more of a competition longer term with the US if China figures out how to get these super hogs mass produced in a big way. Right now you've still got good demand in the US coming out of COVID, all of those things, but there's the anecdotal things. China is probably going to need less pork over time from the US. The value of the dollar, it's up where it was a month ago. Things like that erode away at stronger markets like the hogs. Plus, I can't help but believe that we kind of hit this marketing loophole due to euthanasia and those kind of things last summer, and the hog herd is on the rise. Higher corn prices may have crimped that a little bit, but it's just hard to argue that we should be, well above $100. I just don't see the market holding that up.
Very, very true. Well, on the flip side, cattle have been starting to try to find some support. Yet we were down today, of course. Not surprising with the grain prices, with corn going higher, especially that feeder cattle market. Live cattle weren't too bad, but you look at feedlot country here on the last couple of weeks who tried to push prices a little bit higher. But it's a slow grind in this cattle market, it seems, Bryan, as we move forward.
Yeah, it is. And you've got, on the one hand, hog prices, when they're high, it's like, well, beef's cheaper. And the hog prices come down when they're still high. That makes sense. You're selling hogs, buying cattle. The trade is doing that. But ultimately, it's a sign that more potential pork and more competition. So you don't get kind of these real blow-ups in the cattle market. You can on occasion, but usually it's a nice upward trend, consolidation, upward trend, consolidation, back and forth. We're kind of in that back and forth upward trend right now. There's two things we like. We like the demand coming out of COVID, and then we like the idea that the herd could be shrinking in a little bit. So the overall tone is just smaller supply. That's a function of just really poor pasture conditions out west. A lot of these cows, calves, heifers, steers come off this grass and they got nowhere to go. So they might go in the feedlot or, probably the first wave is sort of re-ownership. Somebody else take ownership of something that somebody's trying to sell. But at some point here, we'll probably see, more cow liquidation and maybe less heifer retention. That'll provide underlying support deep into the next year.
Very, very true. And also, Brian, here on this Monday, what's going on in the dairy market? Let's get an update there.
Yeah, well, the update, it's been looking just nasty, I guess, if that's the right word we want to use. Big production report, the most recent production report, up 4.2%, I think it was 4.2, 4.3% production, bigger than anticipated. The trend just, struggles. Now we got some rebound today. We think that cheese prices have probably gotten cheap enough where they're at to start generating some demand. Blocks, barrels on the rise today. Milk prices, still not in a bad spot, but if you're looking for that upper 18s, $19, $20 area to hold. So as we look at something like August 1703, it's a nice update a day. Now we put this in perspective. On May 12th, so 6 weeks ago, we were over $20. So, $3 in a little over 6 weeks. That's a pretty big pill to swallow. That's a big percentage change when you think about that. Anyway, the point of it is the milk complex has got some supply issues to deal with.
Very, very true. Brian, any other outside factors you're watching or any other thoughts you have for us on this Monday?
Well, I think we might have touched on it before, but we had sort of that just horrible week in the markets a couple of weeks ago, and one day in their beans, I think we're down 5 days in a row. One day over $1 in contracts there. In part, things that have changed. What's changed? Well, a different tone from the Federal Open Market Committee on longer-term interest rates. So we kind of keep an eye on that, see if that trend continues, or that's just sort of a cautionary warning that there might be some concern out there. Big reports out on Wednesday. We'd like to encourage producers just to make sure that they are, planning ahead of the report. I mean, nobody plans to fail, but you fail when you don't plan. So plan about how you want to manage this, how you want to tackle these reports, or if you should sell more into it. Generally, this time of year, not a bad thing if you're in an upswing to sell. Reports historically have a tendency to be a little negative. More times than not, we see corn acreage increase. I want to say out of the last 20 years, and don't quote me on this, but I think 6 out of 20 were higher acres, or I'm sorry, lower acres, and the other were higher acres. So farmers usually have a tendency to plant more when they're surveyed in February.
Very, very true. Brian, I know, of course, if anyone wants to reach out to you and the team there at Total Farm Marketing, they could do that simply by going to the website, totalfarmmarketing.com, or better yet, giving you guys a phone call and chatting with you one-on-one.
Yeah, just give us a buzz, 800-334-9779. We love taking calls and, problem solving and just working with people. So we welcome any opportunity to do that.
800-334-9779 or get online, totalfarmmarketing.com. Brian, appreciate the time as always. Thanks for joining us. We'll talk to you next week.
Okay, my pleasure.
Bryan Doherty with Total Farm Marketing joining us here today on Market Talk for this Monday, June 28th. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great afternoon.